From Daily Forex, this is Chris taking a look at the crude oil and the natural gas markets. In crude oil, the WT grade here you can see has um, kind of plunged here below 52.50. A lot of this is um, the coronavirus, people freaking out that maybe since there'll be less traveling in China due to the restrictions put on certain areas, that it'll drive down demand. And, you can make an argument for that. But the reality is that oil was falling long before then. So most of what we saw come into the market was the dumb money today, chasing what had already been happening as people, panic. So when you zoom out, you can see that we are clearly testing an area that has been supportive. A break at the top of the candlestick is a buying opportunity. Uh, I don't even particularly like oil, but it is what it is. Until we break down below like 50 or something, nothing's really changed. So with that in mind, I do think there's an opportunity, but you need to keep your position size reasonable, and you most certainly are going to have nerves of steel, because this isn't necessarily going to be the easiest thing to handle. Breakdown below 50, though, opens up the door to 45. I think 55 is a good place to start looking for sellers to come in and give any bounce serious trouble, so keep that in mind. Nat gas markets, they tried to rally. They gave up the rally. That's going to be the way going forward for the foreseeable future. I do not like the idea of trying to buy it. I prefer selling it, but I prefer selling it after some type of significant rally. We'll need a spike in the weather or something to that effect in the United States. Spike in the temperatures, I should say, like a snowstorm, something to that effect. So with that in mind, I am looking to sell it on a pop, but we haven't gotten it yet. We could break down below the $1.80 level. That opens up the door to $1.60. I don't like that trade. Again, I think it's just better off shorting the market on rallies.